Hey, what's going on? I'm just gonna put this video out for everyone who's looking to make some extra money through the stock market. This video is my top 5 dividend stocks for passive income, and the reason I wanted to put this video out is because this is the S&P 500 index, and you can see that we've had a massive wipeout in valuation from back in December of 2021. You could almost say that the stock market is now in a confirmed bear market, and this is a great time for any investor to be looking to buy stocks and add to their position, especially someone like myself being a young investor. So I'm not gonna beat around the bush. I'm just gonna get straight into the top dividends, my top dividend stocks that I think are probably the best of all time. So the first one is the McDonald's Corp. These aren't in order, by the way. They're just 5 of my top picks, and I'll go through each of them. So the reason I quite like McDonald's is because they're a massive global company. They keep opening up new restaurants, and when you invest into McDonald's, you're also investing into real estate because they actually own, the lots and every car park and everything. It's all owned by the McDonald's Corp, and they're a franchise group that actually owns the properties, and then the people that own the businesses, they have to pay commission to the business model. So if you look at the 5-year max, or I'll just go max, the max growth chart, you're getting capital gains on the stock. So they're an absolute behemoth. I'd say, they're very, very safe investment. You're going to get capital gains on the stock, as well as you're going to make your dividend payments. So you're going to get around 2.3% return through dividend payments per year. So if I was you, I'd be adding McDonald's into your portfolio. If I go to the historical data, I'll go to the market cap. The market cap is 173 $billion. So if I just go to the dividends and then go over the last, let's just go max, and then look at the dividends, you can see back all the way back, because they've been paying dividends since the company very first started, or I think a few years after. But anyway, they used to be paying a few cents, and then back in the 80s they were paying around about 2 cents, and you can see that they keep increasing their dividend, which is always a great sign. So back in the turn of the century, they were paying around 21 cents. This is all US, by the way. And then they were paying up around $1 up until recently, and now in 2022 they're paying around $1.40. So they're increasing their dividend. Everything looks good, and even through COVID they remain very solid. So I would be adding McDonald's into your investment portfolio. The next one I'm just going to exit out these as we go. Leave that. The next one is IBM. International Business Machine. The reason I quite like IBM is because they pay a very strong dividend. It's 5.14%, and historically speaking, since the 80s and even the 90s, we've gone through a giant tech boom, and most industry and workplaces today, they all use computers, and IBM is a very, very old company. And if you look at the max share price portfolio performance, the share historical performance, they've just continued sort of like a upwards trend. They have come down a little bit, and that's what I'm saying with the S&P 500 crashing this year. This is quite a good investment. It's been quite choppy, so if you can get this around about 100, I'll be buying it right now. I'll be buying this probably anything around $120. I'll be buying IBM and adding that to your portfolio. Their market cap is 115 billion. So again, another behemoth of a company. And I'd be adding, these are all blue chips. So these 5 dividend picks of mine. These are blue chip companies that they're not gonna go bust. You're not gonna lose your money. They're just like a very safe, stable investment. So if you go max on the dividends and hit apply, you can see if we go all the way back in time, say back to the 80s. I'm not going to keep going down, but in the 80s they used to pay around 22 cents. So you always want to look at companies that are increasing their dividends little bit by little bit, because that means that they're they don't have debt, and they're in the money, and every time they make the money they give to their investors and they look after their investors. So IBM have been doing exactly that. Their dividend has been increasing and increasing and increasing. Most dividend companies will pay 4 times a year in the different quarters of the year, and currently for the year 2022 they're paying around $1.60 per dividend, and it has increased in their last one, so that's really good to see, especially through the COVID-19 pandemic. They haven't really been affected at all. So yeah, on to the next one. This one is one of my favorite stocks. It's AT&T Mobile. They just did a giant acquisition. So if you look at the 1 year well, let's go longer than that. They did a huge acquisition where they brought out Warner Brothers, and that's the reason for their decline in share price. So I'd say that when there's blood in the water, there's blood in the streets, and there's a lot of fear, panic, and doubt in the market, that's the time to be buying, especially dividend stocks. And for AT&T Mobile, down at this price, I actually managed to add to my portfolio. I think it was around $18. I put in another $5,000 at $18, and I've got a lot of AT&T Mobile stock, and I'm not looking to sell it anytime soon. I'm actually looking to get more and more and more and just keep adding to this position, because AT&T Mobile is a fantastic dividend paying stock, and when they were trading down around $18, their dividend percentage return was actually around 6.5%. So I'm just shy of inflation, but don't forget that when you're investing into stocks over the long term, you do get the capital gains. So what I mean by that is, if you go, look at where AT&T Mobile used to trade, way back in the day in the 80s, they were trading at around $4, $5, and then they used to trade around that $30, $20 to $28 region back in 2019, 2018. And then because of the acquisition, they've come down. They are valued at around about $146 billion, and because of the acquisition with Warner Brothers, they're looking to add to their revenue, and they're going to be earning a lot more money and giving a lot of the money to their investors. So if you go to stock data and then look at the dividends, let's go max, and apply. So as you can see, back in the 80s they used to pay around about 15 cents per dividend, and they've slowly increased their dividend throughout the time, and these days they pay around about 50 cents. This one right here, the reason for that, like I was talking about, was the Warner Brothers acquisition. Don't be too concerned about that. The dividends are going to be returning back to this level, I think at the end of this year or into next year. So again, that's why AT&T Mobile is a fantastic investment, especially at this price. I expect the price probably to go back up around about $30 within the next 18 months. So you're going to be getting capital gains on this and dividends in the future. So AT&T Mobile is a fantastic dividend stock to be owning and adding to your portfolio. The next one is the Coca Cola company. This is probably one of the top companies. If you're new to investing, you will hear about Coca Cola. I think it's Warren Buffett's favorite stock, but they pay a 2.88% dividend yield, and their market valuation is $264.3 billion. Again, this is a blue chip stock. If you go to their stock performance price, you're going to be getting the capital gains over the long term, and you can see that they're just consistent with their growth. Coca Cola, especially, I think it's in Mexico, it's more drunk than water, I believe, and it's more purchased than water. I would be adding Coca Cola to your portfolio, and it's not just because I guess it's an addictive thing to be drinking, but it's probably because I'd say that they're probably one of the best branding companies in the world. Coca Cola, in my opinion, they have probably one of the best marketing managers and teams in the world. Their ads that they run are everywhere, and they're in practically every single dairy in the entire world. If you look at the dividends, let's go max. They've increased their dividend, each year. It's been increasing, and currently they pay around about $40. They pay around 40 cents per dividend, and that's increasing. So in the year to 2023, you're going to be looking closer towards 50 cents per dividend that you have. So the last company that's part of my top 5 is Johnson & Johnson. Johnson & Johnson have a market valuation of $465 billion, and their stock performance has just been consistent with their growth. So if you invest with them, you're going to get capital gains. And this is the S&P 500 index crashing. So that's what I was saying at the start of the video. The S&P 500 is in a bear market, it's crashing. So the time to be buying these stocks is right now, because you're going to be getting let's go 6 months. You're going to be getting the last time the stock was at this price was around March earlier this year, and then probably around January the highs, the start of this year. It's sort of getting to those levels. So you're picking up the stock at quite a reasonable price. I would be adding all these 5 stocks to your watch list. The one I would be buying in bulk right now would be AT&T, but I would be setting buy entry levels. So if the stock goes down to around say $140 or $150, then you should signal to buy Johnson & Johnson. They pay a 2.55% dividend yield. So if you go to the max dividends, you can see that again Johnson & Johnson have regularly been increasing their dividend, and currently they pay around about $1 per dividend that you own each quarter. So those are my 5 dividend stocks, and I made a little pie chart to show how it's very diversified. I'd say that these 5 stocks are pretty much the only 5 stocks that you would really need. You can add more, but when you're when you don't have much money and you're starting out and you're trying to build a dividend portfolio, what you want to do is you want to pick some good dividend stocks that are spread amongst different industries and sectors of the economy, because that way if one sector or industry has like a really bad sort of year, or even a prolonged negative, I guess, like stimulus, maybe in a recession or something like that, your other companies that are spread across different industries normally sort of like diversify out the negative impact that might have on your portfolio. A dividend portfolio shouldn't really be traded. It should just be added to on the hope that once you get a large enough percentage of stocks, a large enough portfolio of holdings of the stocks that through your quarterly payments, it's enough regular passive income that it will support, like a financially free lifestyle. So IBM, they're spread across quite a few different industries. Mainly they're in computers, but it's spread across automation, robotics, artificial intelligence, cloud computing, consulting, blockchain technology, computer hardware, software, quantum computing. AT&T Mobile is spread across the telecommunications industry and the technology industry. McDonald's, they're spread across the restaurants industry, and then also the real estate industry, which is massive because you do want to have a finger in real estate. So when you purchase the McDonald's stock, you're actually investing into that industry as well. The Coca Cola, they are actually manufacturing as well, but they're in the beverage industry. They own a whole pile of sub brands, I think Schweppes and a whole bunch of others, not just Coca Cola. And then Johnson & Johnson, they're in the healthcare and pharmaceutical industry because they make drugs, which again, massive industry. So you're quite spread across, and diversified with these 5 stocks, and they all pay a really good dividend. So if I pull up the calculator, and let's just put in some figures. Say if you were to invest $10,000 and then you were to earn a yield of, let's just say, with all of those, those yields, you'll probably be looking at something like a balanced out, say 4.8% return. So per year you'll be getting $480. So $480 divided by 365 days of the year. So you'll be earning $1.30 every day, right? So you go 480 plus 10,000, and then you were to do that, say every year for the next, say let's just say 3 years. It's pretty realistic. So roughly speaking, your portfolio, if you every year you would keep contributing to it, yada yada yada, you'll be getting 8%. In around about 3 years, it'll probably be a little bit higher. And also the base capital would probably be valued a lot higher than $30,000, based off the current inflation rates and your capital gains on the stocks. I would expect it probably be closer to around about $38,000 to $39,000. But after 3 years of this investment strategy, you'd be looking at $1,500 per year in passive income. So let's just round it, call it 1,600, divide that by 365 days a year. You'll be making then at that point in 3 years close to $5 a day. And if you were at that point to start taking that money out and just putting it straight into your everyday spending portfolio, say account on your bank account, $5 a day is enough to buy coffee. So you could go to work every day for the rest of your life and get a free coffee through an investment strategy such as this. Some people invest far more than $10,000 a year into stocks, but I would highly recommend purchasing some of these stocks currently, especially over the rest of this year as we go into September, because I'm expecting the stock market to continue its downtrend, and it's a really good time to be picking up some dividend stocks and building a dividend portfolio, because one day if you get a large enough portfolio of capital spread across a whole bunch of dividend stocks, you be able to quit your job and live a financially independent lifestyle with regular income that will pay all of your bills, and that's the dream. So I hope you guys like the video. Please like and subscribe. I'm really looking for some more subscribers so I can start reaching some more people and start putting out more content. So yeah, hope you enjoyed the video.